What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today we're talking about Plug Power, but before we really get into it, there's something I have to ask you to do, and that is hit that like button, turn it blue, drop a comment, subscribe if you are new. These things really help the channel grow, and that helps me create better videos for you. That's a win-win, and we like that here at the Wealth Investing Network. Jumping into Robinhood, we're looking at Plug down a little over 5% today. Plug has had some pretty bad news come out lately, and we're going to get into why people are selling. So, Plug Power will restate financial statements for the last 4 years. That news came out at the end of the day on Tuesday. Diving into this article, Plug Power, the hydrogen fuel cell company that reported GAAP losses and negative revenue in its most recent quarter, well, they announced some accounting issues, and that sent their stock tumbling. They were supposed to file an annual report with the SEC, or Securities and Exchange Commission, but they said they needed an extension. They said they needed a little more time to crunch numbers, and apparently it's because they're going to restate fiscal years 2018, 2019, and their quarterly filings for 2019 and 2020. And here's what investors don't like to see. When they were working with their auditor, they discovered errors in accounting. And you're going to see a bunch of phrases that look kind of scary. Plug needs to fix the book value of right-of-use assets and related finance obligations, loss accruals for certain service contracts, impairment of certain long-lived assets, and classification of certain costs, including costs related to research and development. I think we're going to need a lot more clarification here, but at this time, the only thing management really wants us to know is that they do not expect the restatement to affect Plug's cash position or business operations. And they said these are just errors. It's not misconduct. No one did anything malicious here. No one did anything to try and defraud investors. But that's not going to stop people from suing. I saw a couple of these kind of announcements. Plug Power sued for violations of federal securities laws. When a stock starts going down like this, a stock that had been up above $70 and basically gets cut in half over the course of a couple months, investors are going to be upset. Even though Plug is saying right now, hey, we didn't try to mislead investors. We just had some errors. It doesn't affect our cash position. Investors see accounting problems and they say, hey, I don't want to wait around to see if this gets worse. And there are some people that are holding. I'm one of them, but I actually got my share for free. Robinhood gave this to me when I signed up. Links in the description if you do your research and you want some free stocks. Also in the description, check out my other videos on Plug Power because I'm not really going to get into what this hydrogen fuel cell company does because I've done it before many times. So feel free to pause this video, check out my other videos, and come right back because I want to move quickly. So again, I'm holding this stock and I'm comfortable with that, but that's because I got this stock for free. I'm sure there are people who are buying the dip, but I think this article gets it right that a lot of Plug shareholders are likely to stay on edge until the restatements get formally made. Because I mean, as of recording this, Plug Power stock has lost 25% of its market cap since the bad news started rolling in. Some analysts are withdrawing their buy rating on Plug stock. One analyst actually cut their price target nearly in half, but a couple of others are calling this sell-off a buying opportunity, and that's because right now, Plug is claiming they're just reclassifying things with accounting. It's not really affecting their business or their prospects, but it all kind of depends on your risk tolerance. It is a risk. Investigators are going to dig deeper, and Plug has been doing a lot of accounting things lately. Plug Power actually increased their number of shares outstanding by more than 30% since last fall, and here's the visual chart on that. Basically, when a company's been around a long time, for over 20 years like Plug has, usually they're trying to reduce the number of shares. When they're inviting more people in by issuing more shares, your shares are being diluted. Your tiny piece of the company gets even smaller. And usually that's pretty bad for a stock. Yes, they're using investors as a piggy bank. It gives them more cash on their balance sheet, but usually companies that have been around a long time do share buybacks. They issue dividends from the money that they're actually making with their business. But there was so much hype with the announcements in Europe about what they're doing with renewable energy, with the new American administration and their supposed commitment to renewable energy. Plug kept issuing shares and people kept gobbling them up, and there was a lot of institutional buying. Plug Power is a part of a lot of renewable energy ETFs. And so jumping into macro trends, looking at their revenue, while their revenue has been increasing, there would be a lot more things that I would want to see if I were to actually think about buying this company, because they could just be capitalizing off of hype. One thing that sent their stock price up was that SK Group made a deal with Plug Power for a 10% stake, a $1.5 billion investment. Well, I think a good question is, when did that deal get finalized? Because was it a 10% stake when they had an over $30 billion market cap? So it seems to me that accounting is very important. I don't know if you remember when GM made an announcement that they were investing in Nikola. Well, when Nikola's market cap tanked, they changed the terms of that investment, because otherwise that would have been a really bad deal for GM. And speaking of deals, Walmart and Amazon are customers of Plug Power. These companies use Plug Power's fuel cells for their forklifts, and these customers accounted for 2/3 of Plug's sales in 2018 and half of their sales in 2019. And Walmart and Amazon got a steal. I mean, they basically got paid to buy Plug's products. In 2017, Plug Power offered them warrants for their stock in exchange for every $50 million of purchases. Walmart and Amazon are no dummies. When you go back to 2017, this was a penny stock. The appreciation of Plug Power stock has made it possible for these companies to actually earn more profits from the warrants of Plug Power than what they actually spent on hydrogen fuel cells. So again, I think with Plug Power, accounting is very important. And the company needs to come out and clarify a little more because I'm seeing articles with a bunch of different things. One article says that the issue with their gross billings was the result of negative revenue being recorded from non-cash charges related to the accelerated vesting of a customer's remaining warrants. Well, two of their biggest customers are Walmart and Amazon, and they're the ones with a lot of the warrants. So could this mean that Walmart and Amazon are cashing out on some of those? I don't know. I'm not a financial advisor, and this is not financial advice. If you're here to follow my journey, great, because these videos are for entertainment. Do your own research. And it's tricky because this stuff is confusing. I don't know if you saw Jim Cramer on CNBC, but he didn't really seem to know what was going on with Plug Power either. All he could do was pretty much read a statement from the CEO. And so there's a lot we don't know, and this is where conviction comes in. If people really have conviction that Plug Power is going to make so much money selling their hydrogen fuel cells, we really have to see if that conviction will hold up the stock. Well, this company's operating margin is not so pretty. Here's the breakout from macro trends over the last 5 years. Up top, we've got the trailing 12-month revenue. Then we've got the operating income and the operating margin. This is simply the money you bring in over your expenses. This isn't counting your taxes or your debt or any of those things. Just at the end of the day, with all the money you bring in, are your costs low enough that you're actually making a profit? So we see this beautiful picture up top of revenue growing up, but when you look at this middle section, their operating income gets more and more negative as revenue increases. This shows you that creating those hydrogen fuel cells is very expensive and it's not getting cheaper. So they were paying Walmart and Amazon to take their product at a loss. And at the very same time, they were increasing their amount of shares using investors as a piggy bank. That tells me they're bleeding cash. Here's another view on it. As their revenue is going up, their cash from operations and net income still are not getting over that zero mark. And again, this company's been around since the 90s. They've been on the stock market for over 20 years. People have been excited about it before because it's cool technology, but they were penny stock for years up until recently because investors knew that this company has not figured out a way to be profitable. But look, I'm not a Plug Power bear. I'm not trying to get you all to be bears with me. I'm holding on to my one share just because I'm curious. I got it for free. I'm willing to see what happens. But with all the accounting errors that Plug Power apparently has, with the lawsuits being filed, it's definitely not looking good for Plug Power today. But I want to hear from you. What do you think? Let me know in the comments. Check out the links in the description for other videos. While you're there, please leave a like, subscribe if you're new. And with that, thank you so much for watching. Shout out to all my international viewers, my Brazilian viewers, my German viewers, Canadians. Talk to me in the comments. See you in the next video.